Good morning, good afternoon, good evening. Welcome to the Monday, 11th of April, Bull versus Bear Trade Day webinar with Steve Miley on the call. Welcome, everyone. We're going to go through our usual regular run through in here. Obviously, slightly different on a Monday. Tend to take a look at a bigger picture view of the week on the Monday. So we've got a lot to get through in here. I'm going to fire through. Probably not as much of a focus on the charts today because we've got a lot to go through. So, but we'll run through in here and see what's really impacting markets from a macro fundamental geopolitical perspective. We'll look at the calendars in this case, because we're going to start looking at the micro calendar, the earnings calendar as we go into earnings season, and we'll also take a look at the charts, but very quickly on the charts. Okay, guys. So let's kick off in here. This is the trade day weekly recap and outlook, recap and update that I put out. Usually it comes out on a Saturday or Sunday, and you'll see that in the in the traders section in the trading room page, and you'll be able to see it under the market analysis commentary where you see the technical analysis. We put this out on the weekend. So just recapping what we saw last week, no surprise here, everything we were talking about. Hawkish comments from Brainard, sending bonds lower price, higher yields, reinforced by Wednesday's FOMC meeting minutes. The situation in Ukraine really far less significant in here from a geopolitical standpoint. Obviously, it's having a macroeconomic fundamental effect in here, but actually what's going on there is fading in how it impacts markets right here, right now. And the European Union joined with the US in imposing further sanctions on Russia last week. What ended up happening? Well, US stocks were lower, led by the Nasdaq, led by the growth and tech sector. Growth and tech, remember, gets hit more significantly negative when we go into a higher interest rate, higher yield environment, impacts more negatively on growth stocks. And we've seen that in here all throughout last week. It's been a theme throughout Q1, more aggressive last week as we saw this surge to higher yields go to lower prices, not just on US bonds in here, but global bond indices. Global bond markets. And then the indices were led lower. European and UK stock indices actually did quite well. The FTSE, the UK, was actually up last week with the Nasdaq, significantly down, like 3-5% down the Nasdaq on the week. And S&P 500 and the Dow Jones not as damaged as the Nasdaq, but nevertheless lower on the week. And the dollar surged against pretty much all currencies, particularly against the euro and the yen and the pound, moving to multi-week highs versus those currencies. And also where the risk currencies, the Australian, New Zealand, Canadian dollars have been doing quite well. We've seen more of a move towards a correction lower for those currencies as we've gone more into risk off mode, and we've seen the dollar strengthen against those as well. So the dollar king at the moment. And then the commodity front, gold, oil and copper in erratic consolidation ranges, but within those ranges, I say gold looks slightly positive, oil looks more negative, and copper looks positive as well, since those blowout tops were put in at the beginning of March. What we're watching for this week, well, if we go through the update in here, obviously we're watching Ukraine, anything goes on in there. Just a heads up, so Friday the 15th of April is Easter, Good Friday, holiday, markets closed, UK, Europe and US, limited hours, okay, so watch out for that. My strong advice, even if we've got limited hours, you can trade on the futures in the US markets, the markets you're trading with us at Trade Day. Don't trade, take a day off, take a break. Okay. It's, unless, there's a real opportunity, I would say don't trade, because it's going to be super illiquid, given that it's only partial openings on Friday. And then on Monday, just a heads up as well for you, particularly you guys in the US, it's a holiday. Monday the 18th is Easter Monday in the UK and in Europe. So a lot of the planet is closed on Monday as well. The US is open, but again, you could have less liquidity. So just watch out for that if you are, and that's a week away. That's not today, that's a week away, but just a heads up ahead of that. What do we have this week? Well, it's a busy week. We've already had Chinese CPI this morning and also UK GDP, manufacturing, industrial production data. They're all quite backward looking. But going into this week, we've got 3 central banks in play and a host of Fed speakers. So we're watching out for the Fed speakers as they come through the day. But this week, on Wednesday, we get both the RBNZ, okay? In the US, you actually get that probably late Tuesday evening. And then we get the Bank of Canada on Wednesday also. And then on Thursday, we get the ECB, the European Central Bank. So they're all going to be significant events. The most significant events are the CPI data releases, We get German CPI tomorrow, UK employment as well, but German CPI tomorrow and the ZEW survey for Germany. Probably the most important data point of the week is on Tuesday, tomorrow, US CPI. Get that RBNZ interest rate decision and the BOC, Bank of Canada, both on Wednesday. UK inflation data, also watching that. Remember, if anything, we've had a very hawkish tone from the Bank of England. Okay, so seeing what they're doing as well, watching that CPI data on Wednesday from the UK. Get PPI from the US as well, producer price index. Thursday brings the Australian employment report and that ECB. We also get US retail sales, another significant piece of data. And Friday, markets close for the Good Friday holiday. So we've got a lot in this week. Okay, three significant central bank events, particularly the ECB, Bank of Canada as well, could be relevant for markets you're looking at. We've got, particularly obviously if you're trading the currencies, certainly that is the case. And the main data point for us to really be watching for this week is the US CPI and also the Fed speakers that we get peppered through the week. Let's take a look at what we do have coming up in here today on the Fed speaker side going into the day. So this later this morning, okay. We're just where are we now? We are 7:30. So 2 hours time, right? We get Bostic and Bowman. And then later on today, Williams. Okay, so all significant speakers in here, watching out for those as they come out through the morning in the US and through the afternoon in the UK, Europe. Okay, so they're going to be significant. I'm not going to go through the rest of the calendar. I've already pulled out those significant points. The other thing we need to keep our eye on, guys, in here is the earnings calendar. Now, here's the investing.com earnings calendar. Go for investing.com/earnings-calendar. Okay, you'll find it quite easy when you go to investing.com. Go to investing.com. Now, the thing in there, you see loads of stuff in there, right? But we don't want to be looking at all this. So we're going to filter it down. What do we really want to be looking at? Well, we're going to look at stocks that are going to impact the indices. We're trading the indices with trade day. We're looking at how it's going to affect the bigger macroeconomic backdrop. So what stocks are going to influence those? Well, we're going to going to apply the filter for the United States only. And then we're going to hit 3 stars over here, how important those are. So it's only going to be the bigger stocks. And we're going to hit apply. And then we get a much smaller list. So where do we kick off? Wednesday. Excuse me, I'm going to sneeze in a minute, guys, by the way. It's just coming. I can feel it coming. So Wednesday, we kick off, as ever, in the US with the earnings season. Oh, there's that sneeze. Excuse me. So Wednesday, we kick off in earnest with the financials and the banks. And what we get is JP Morgan, BlackRock, First Republic Bank all come on Wednesday. Delta Airlines as well. Might want to watch out for that. You can see in here in this market cap column, by the way, for each day they are filtered, and you can change it around in here. But it's always automatically filtered by market cap, and the largest market cap comes to the top. So obviously, the bigger the market cap, the more important the stock. The market capitalization, what the company is worth by process of its share price multiplied by the number of shares. So it's market capitalization. So we're looking at certainly for JP Morgan, BlackRock, and probably those are the main 2 coming up on Wednesday. If we move through to Thursday, United Health, we'll definitely be keeping an eye on that. It's a huge corporation, over half a $1 trillion company. And then we get Wells Fargo, Morgan Stanley, Goldman Sachs, Citigroup, US Bancorp, PNC Financial, State Street. Keeping an eye on all of these, obviously the ones at the top more important. And then Monday, this is going into next week now. Remember, it's the UK European holiday. Then we get Bank of America. Okay, but that's going into next week. So really, Wednesday, Thursday is going to be the focus of the day as the financials start to come out. So don't forget they're coming out. Remember as well, when you see on the side of your time, there's either a little sun or a little star. All these have got a little sun. That means they're coming out before the market opens. Okay, before the opening bell, before the cash market opens in the US. Okay, what else we got? Let's take a look at the geopolitics in here and the macro fundamentals. 5 things to start your day out of Bloomberg. So Russia's not going to do any more bond sales for the rest of the year. Probably no surprises there. We have over the weekend, for those of you in the US who don't really focus so much on Europe, we had the first round of the French presidential election. And in that, basically the 2 front runners, as expected, were the current incumbent, President Macron of France, and then also Marine Le Pen, okay, who is from the far right. Okay, so they are going into. So the way they do it in France is they have the initial poll, and then the 2 front runners then go for another election for the 2 front runners. So we get another round of votes, which comes in 2 weeks' time, on 2 weeks from yesterday. So on April the 24th, the final round of the French election, and that's what the same as what we had in 2017. Macron did have an advantage. Le Pen is closing that advantage, gaining momentum. Okay, but the market in here was cheered by the fact that Macron certainly is ahead in here. So we've seen actually the euro rebound in here on the back of that. Okay, so the euro has gained in here, and we're seeing actually French stocks. If I go and take a look at where do we have those stocks in here, if we look at the stock indices now, the stock indices across Europe are all lower, but you see in here the CAC 40, that's the French stock index. It's up 1%, just under 1%. Okay, with everything else down. Okay, FTSE's down about a third. The DAX, the German index, about a third. Obviously, we'll come to actually. I'll look at the US indices now. US indices are lower again in here today. So we'll go in here on the futures. So even though we eked out some gains in here on these, so the Dow Jones was actually up on Friday. That's the cash market open, and the S&P eked out, I think, small gains. Nasdaq was definitely down. We're notably lower in here. The Nasdaq was nearly down 1% at one point this morning. Again, and that's because of higher yield pressures, the sell-off in the bond market, which I'll come to shortly. But you see in here, again, look, the Dow's hardly down at all. Okay, the S&P 500 about 0.5%, but you look at the Nasdaq getting significantly hit on these higher yield pressures in here, higher interest rates, putting more pressure on those growth stocks on the tech sector. So we're certainly seeing that being a feature in here today. But as I say, CAC in here, the French CAC 40, the French index bucking the trend in here up because of the market taking the difference, the fact that Macron is ahead as a positive. Just a few other things here. Elon Musk has said he doesn't want to join the board at Twitter. Okay, and the stock has dropped back lower in here. And that's just kind of recapping what we've spoken about already. Fed speakers, Bostic, Bowman, and Waller speak. Oh, they're saying Waller speaking today. Okay, we had Williams there, right? So run through these already. It's just so yeah, the main thing this morning in here, what we're seeing in Europe, stocks, bonds full on economic political concerns in here. Okay, and the euro's gained amid tight French presidential election rate. Oil is lower in here. So yeah, lower again in here, again following the theme from last week. And if we take a look in here, what I'm going to show you here, so this is from TradingView. This is the Bund future. Okay, so the Bund is the German government bond, and you can see the Bund was selling off all last week, as was with the US treasuries, and then this morning gapping lower and breaking below here the March low, the late March low. This is the Bund future. This is the equivalent of like the US 10-year note future. Okay, so the Bund in here accelerating low. It held above this March low, but actually gap lower this morning and aggressively pushed lower. So it's lower in price, higher in yield. And if I go to the yield chart in here, what you'll see, here's the yield chart. Just pop this a bit bigger, and you can see the same thing in here. Okay, so this is the yield on the German 10-year yield in here, accelerating higher in here, up above the March yield peak this morning. Okay, so just echoing that. And if we take a look at the US, the US 10-year, this is the yield on the US 10-year. Again, we were higher all last week, up in yield, and higher again in pre-market this morning, just short of hitting 2.8% in here, up to 2.78% on the US 10-year yield. And we can look at that here on the future, just popping the future out on Tradeovate, and here we have another push lower. But we have had a little bounce, but nevertheless, another push lower in here this morning. If we come into the 30-minute chart, remember, we're looking at this last week, this trend line, this really solid trend line. Market's kind of flirting with it. I think this trend line needs to be redrawn there. Again, I think, we spoke about this last week. I think, you need to monitor this. This is what's driving the Nasdaq lower in here, okay? You really need to be watching this bond chart in here. And I think we've got this trend line in here. Okay, and it's flirting with it again. Look, you've got a potential double bottom in here now. It went lower this morning, rebounded lower again, and rebounded. Now, again, we set up positive like this. If you remember on Friday, we had this was starting to turn here. We were in here. Okay, it was starting to turn. It looked like we were going to break higher, and then boom, it went aggressively lower again. Again, we're getting a hint at a base. If this base is, you're going to get a rebound in stocks. If it doesn't, if we go here again, we go south again, stocks are going lower with it. Okay, I'll return to that in a moment. Okay, but that's the driver in here this morning. Stocks and bond, European bonds are getting hit on the downside, selling off, lower price, higher yields. European stocks lower on the back of that, apart from the CAC, which is higher because of the Macron is looked like he's going to actually win here. And again, in here, look, treasuries in the pre-market slump ignites global sell-off as rate hike gains focus. US 10-year yields rise above 2.75. We just said that. The UK 2-year yield hits a 2011 high. German curve is steepening as well. So all of these things seen as a negative. We've already run through this. Let me run through some of these other articles I've got in here, though. We've covered most of this, but look, inflation, rising rates, war create uncertainty outlook for US earnings. This is just going into the earnings season. Okay, we've already looked at that. Again, headlines in here. Futures tumble as surging yields hit growth stock. We've already covered that. Okay. Fed to raise rates aggressively in coming months, say economists. So this is interesting here. This is a Reuters poll. I've got the actual, I think the poll is in here. Oh no, where's the poll? I think it's in the Forex Live poll in here. But in here, the poll in here is expecting the next two hikes to be rate hikes of 50 pips, okay? So in here, I haven't gone through this whole poll, okay? But I do know the headline takeaway was, and I think they've got it over here. Let me see where I've got it. No let up in European bond selling this morning. Here it is. Here's from the Reuters poll. So 85 of 102 economists forecast a 50 basis point rate hike in May. 56 of 102 look for another 50 points rate hike in June. So we're looking for, so the poll from Reuters now, and the majority just now thinking that we're going to get back-to-back 50 basis point rate hikes. And that's kind of the headlines basically in here from these this Reuters poll. If you want to go and dive more deeper into it, go take a look in here, Reuters.com. Okay, go and look for the poll there. And then again in here, US yields near 3-year high, euro stronger after French election. We've already looked at that. And oil is lower. Oil slid lower in here this morning on release of the strategic reserves. We knew that was coming anyway. Okay. And then also the Chinese lockdown here. So maybe potential lack of demand. So again, Forex Live covering no let up in bond selling in Europe this morning. And we've looked at that with the futures in here, the Bund future and 10-year German yield going higher. We've already looked at that back-to-back 50 base points, 50 pip 50 basis point rate hikes in May and June from that poll. In here, Macron's first round lead, a light comfort for the euro, slight bounce on the euro. Again, we've looked at that. And then again, we've already spoken about it's holiday shortened week in Europe. Okay, so we've already looked at that. What's the Fed funds rate telling us? What's the CME Fed Watch tool telling us? Well, 81% chance now, pretty much the same as Friday, looking for a 50 basis point hike in here at the May meeting. And if we go to June now, in here, increasing charts. Remember at 25 in here to 50. Now the chances are of 125 to 150. So they're talking 100 up. Okay, so looking the majority in here over 50%, and then you've actually got 80% in here if you think about it, because this is even going for even more aggressive rate hike pricing in. So we're pretty much 80% pricing in to 50 basis point, at least 100 up in here. Only 11% chance we're at 100 to 125 basis points in here come the June meeting. Okay, let's have it. I'm going to run through the charts fairly quick in here, guys. Okay, but we've already looked at the bond market there. Let's take a look at the S&P and the Nasdaq. So the S&P actually is just back within the range that we saw at the end of last week. Wasn't nowhere near as damaged on Friday. We got that rebound on Thursday and was kind of a consolidation. We're actually low today, but we're holding above the lows and we're getting a mini bounce in here. I mean, you got to say it looks fairly bearish, falling again here. You know, you break these lows and it's in free fall again. Okay, so it's looking negative, but just watch out for those treasuries. Okay, that's all I'm going to say. Watch out for those treasuries. Nasdaq even more negative. So we did rebound on Thursday. Remember, we had that. We held the 8.2. Disaster on Friday, back down to the lows, even lower this morning. We're heading, only just broke the 38.2. Now we're heading quickly to the 50% retracement of the whole rebound that we saw from the middle of March through the end of March. Okay, so nearly giving half of that back in just over a week. But we're holding at the moment above that 50%. Let's have a look though. No sign of a rebound in here from the Nasdaq. Okay, again, it looks like we're playing that from the short side, right? Let's now take a look at commodities. First of all, a quick nod to the dollar in here. And we just looked at that. Sorry, that's not the dollar. Here's the dollar. And again in here, another new high on Friday is actually set back, but then rebound again in here today. That kind of little setback we're seeing in here this morning was due to the euro strengthening, but already the dollar pushing back higher in here this morning. Okay. And then I've got another sneeze coming, by the way, guys. And then in here, oil. There's the plunge lower seen in here this morning. Again in here, we've been in a kind of, if I just flip this to the, can I get it onto a weekly chart? Will it allow me to do a weekly chart? No, only minutes. Okay. But if you put this on a weekly chart, it was kind of consolidating. All these commodities have been consolidating since this blowout top. You've been kind of sideways, but definitely a negative tone. It was a weak close. And then look right back to we're through last week's low. And then if it takes out this low in here, this looks like a really negative topping pattern in here for oil. And I can see this significantly back lower in here. So the lower in here is, despite all the supply disruptions, this is all about concerns about, well, one, Shanghai, right? Lockdown Shanghai. But two, where's the global demand? If we're going into recession, global demand's going to fall, right? So, that's going to see oil price lower. The low there, 92.20. You got an impulse low from the 17th of March, 93.41, and the low so far, 93.48. I think that's important as well. We're just holding above 93.41. If you get through 93.41, I think it'll be through 92.20, the actual low there, very quickly. And then you're heading quickly towards 90. So very negative there on oil at the moment. And a quick nod to gold. I've talked about how boring this has been, and the talk just there that it was a strong weekly close. It was boring up until Friday. Pushing higher again this morning. I can really see us challenging that high now and looking for a bullish breakout. Risk off, even with the dollar strong. Even with the dollar strong in here, risk off environment, buy gold. Okay. So normally the inverse relationship between gold and the dollar, but risk off scenario, real concerns, and in here, and then we're looking this to the upside in here, breaking out potentially above that peak there, 1972.5. The impulse peak from this, again, is from this one's from the 28th of March. Impulse peak is 1965.2. Where are we there on the high? 1963.6. So 65.2 through there could very quickly see us to 1972.5. And then we could even be heading up into the 1980s. Okay. So, only upside I can see there at the moment. But again, keeping an eye on that treasury market, no matter what you're trading in here, I think you have to have an eye on this chart. Okay. And if that swings, we base out here, we could get a little bit of a turnaround in these markets. But at the moment, we're playing it from a risk-off scenario from my perspective in here going into today. All right. Any questions? Anyone on live want to ask a question? Now's the time to do it. If not, I'm going to wrap it up there. I'm, as ever, going to wish you all a great trading day. Stay safe out there. James will be covering me tomorrow on Tuesday's Bull versus Bear webinar. Until Wednesday, I'll see you then.